Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing well, a little bit tired. Made the road trip back from Missouri to Ohio yesterday. Stopped in at home for Mother's Day just briefly there, so that was a good little trip. So, how are you?
I'm good. I'm good. I'm glad you got to go home and see your mom. I got to go see my mom as well. And it's nice. This is a nice time of year. It's nice because grades are done.
Mhm.
Students are, off for the summer to go enjoy whatever activity they've got. So it's nice to get a little break here at the end of May for a couple weeks.
Well, I think it was good for me, as we're rolling on through planting to get it over into the Western Corn Belt to see things. It's a little bit drier, out in where I was in Missouri. We did get some rain over the weekend, but also it was, mid 80s, pretty humid. So it was some pretty high heat for this time of year too.
Yeah, and it flipped really quick because we were cool last week. It got humid and warm last week, and now we're cool again to start. This week, mid to upper 60s and low 70s for the majority of the week so far.
Well, talking about some slight cooling there, we've seen some slight losses within the grains and oil seeds over the last week. So just a rundown here. That July corn crop on the week down 4 cents at 5.92. December corn was down 14 cents at 5.15. July soybeans was down 33 cents at $14 even. And that November 23 soybean crop down 41 cents at 12.31. Soybean oils did drop also roughly 4 cents down to 49.69 cents per pound. And then we saw a $4 gain per short ton for soybean meal for the July contract up to 430.90. That new crop July wheat contract was up 6 cents on the week at $6.60. And then we did see a nearly $2 loss on crude oil down to 71.17. So, Ben, we saw a lot of highlights coming into this week for what was really pushing the market around, starting out with weekly U.S. Gasoline demand. It's really been up and down, but for most of the recent data, it's been up slightly, over the last week or so. And then U.S. ethanol production was down about 3 million gallons on the week, and that's below the previous volume in the 5-year average. So Ben, can you talk to me a little bit about that on the fuel front?
Yeah, for sure. So we have seen some I guess volatility maybe in gasoline demand there. I think for me, as we look at it and think about what this could mean for the summer driving season, we will see hopefully a pickup here for driving that's going to transition into the ethanol market. As we sit today, ethanol production for the marketing year is about 20 million bushels less than where we should be to hit USDA's target for the year. Now that 20 million can be caught up. We can catch up, and certainly now with E15 being approved for the summer driving season, that's going to pick up 5 or 6 million bushels there. So we still got time to catch up, but if we don't see driving increase over the summer months, well, for whatever reason, maybe that's gasoline prices go up, maybe that's uncertainty about the economy. For whatever reason, if we don't see driving increase, USDA will have to cut their corn target for ethanol production.
So you're saying we need a big swing in agritourism.
That's right.
Looking elsewhere at the global market, there's a bearish export sales report coming in on this week after corn sales were negative last week. Also some mixed sales for soybeans, really bearish on that side overall. Ben, what's your outlook on the export front?
Yeah, so I'll start with corn here for just a second on the export sales front. It's been a bearish couple of weeks for corn exports, and I that just kind of kept the trend this week. As we look ahead, a couple of things I'll just put out there. China has been canceling some sales. We saw about 33 million bushels canceled over a 3-week period the last few weeks. As we think about China moving forward, China still has about 111 million bushels of outstanding U.S. corn commitments, and they could cancel some of those 100 plus million bushels of sales as we see Brazil have a very strong corn crop and cheap prices relative to the United States. So that is a concern there on the corn front. When we look to the new crop for corn, we saw 3 million bushels of new crop sales to Mexico. That was promising. On the soybean front, U.S. soybean sales have also been really soft here for the last month. We saw U.S. soybean sales last week at 2.3 million bushels. That came below all trade expectations and provided a little bit bearish tint to the market there. We also saw some new crop, about 2 million bushels of new crop soybean sales to Mexico, Japan, and Egypt, which is also Portugal, Mexico, and China. I apologize about that. Portugal, Mexico, and China. And so that was promising as well. So, and then on the wheat front, as we look to wheat, there's just about 3 weeks left in this old crop marketing year. Wheat commitments are about 45 million bushels below the seasonal pace needed. I thought maybe we'd see USDA revise that old crop wheat exports stocks down on Friday. They didn't. However, I expect some of those to get rolled into the new marketing year.
Well, Ben, moving right along, looking at the agricultural economy and the trades that were happening on the week, we saw managed money holdings really be mixed at the CME, and then open interest futures and options contracts were really higher across the board. We saw more of them. So, Ben, what does this really indicate you about the market right now?
Well, in general, I think there's maybe a black swan that's starting to swim a little closer to the shoreline, and that black swan being the U.S. debt default, or a U.S. debt default. It's never happened before, and the scope of negative repercussions related to a default are unknown. We don't know how deep or serious it would be. However, there's kind of broad agreement that this would, be very, very severe for the U.S. economy and might even pull the world economy into a deep recession. So that all would be very bearish for commodity markets. And I think what we're seeing now is starting now, leading up into the next couple of weeks, is some of these market economists, market traders start to move to the sideline, liquidate positions, either long or short. And that's really going to affect those commodities that have big longs built up. Soybeans, for instance, has been working down some of their large long positions, and that's put a little pressure on the soybean market here as late. So over the next 2 weeks, I do anticipate some market activity to move to the sidelines. That's going to be a little bit bearish to our commodity markets, especially in the meat and energy sector.
Ben, so this has never happened before, though, right?
Oh, that's correct. It's never happened before. And truthfully, I don't anticipate it to happen this time. However, I do think that any deal that is made is going to come as the clock strikes midnight. And, while we don't know what the negative repercussions are, I don't think either party wants to see the U.S. go into, a deep recession that impacts lives and retirement accounts. And so as I think about this, I'm sitting here going, I don't think it'll happen, but we've also never been this stubborn from a political partisan point of view. And so I'm not sure which side will blink first, if they blink, I guess, but I do think they will. And as a result, a deal is going to get done. It's going to be in the 11th hour, and market participants will move to the sideline, and that'll be bearish for our commodity markets.
Well, Ben, it kind of sounds like the market might be, the guy that says they don't believe the house is haunted, but they still won't go inside just in case.
Yeah, I think that's that's a pretty good analogy for, I think, where I'm at.
So looking, I guess, elsewhere on factors that should really be paid attention to moving forward, we're still seeing, planting progress across the eastern and western corn belt still, going around weather patterns and different, amounts of moisture there. So, Ben, as we move through planting, how is that impacting the U.S. market currently?
Sure, and I think we had quite a bit of planting premium built in to the markets as a result of some late planted forecasts, primarily in the upper plains states of North Dakota, South Dakota, and Minnesota. I do anticipate that we will see, some elevated prevent plant acres in that area, just given their weather forecast and their challenges getting planted. However, I'm not 100% convinced that corn and soybean planted acres in total across the U.S. are going to be that far down. I think in the southern part of the United States, or the southern part of the Corn Belt, like places like Missouri, Illinois, parts of Iowa, Kansas, I think we're actually seeing more corn and soybeans planted than maybe what was initially anticipated, due to some dry weather and just, good conditions to plant. To me, what I think potentially has the biggest impact, or, where we're going to see the biggest impact of this late planted conditions in the Northern Plains is in the spring wheat market, and really just the wheat complex in general. When we look at that spring wheat market, only 40% of the spring wheat has been planted. That's well below the average of 57%. And that's just going to further tighten that wheat market. When in the Western Corn Belt, Kansas and Oklahoma, where we had very dry conditions and it really hampered that winter wheat crop, some of that has gotten rain. It's not been early enough to help the wheat. And so some farmers have tilled up their winter wheat and planted corn and soybeans now that they have the moisture. Now that they have more moisture. I shouldn't say now that they have all the moisture, but now that they have more moisture. So I'm not convinced that we're going to see a drastic reduction in corn and soybean planted acres, but certainly in that winter wheat and spring wheat market, we could see some continued tightness.
Well, looking at that tightness coming out of the U.S. market, how closely, I guess, is wheat monitoring what's happening still in the Black Sea whenever you see, some good and bad news when it comes to continued trade moving out of that region?
Sure. Yep. It's just a further reduction in global supplies of wheat. That accompanied with lower production estimates coming down off record production estimates in Russia, a lower production year for Australia, and now potentially some tightness here in the U.S. in our both spring and winter wheat markets. So continued tightness just due to lack of supply globally.
All right, Ben, moving forward, looking at the rest of the week, what should farmers and ranchers really be paying attention to?
Yeah, it's a pretty straightforward week. The one extra report this week that we have, in addition to our normal ones, is cattle on feed this Friday, May 19th at 2 o'clock Central Time.
All right. Well, Ben, it's always a pleasure having you on here. Viewers, listeners, if you'd like to learn more about what we do or our sister program at the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield.